Ladies and gentlemen, partners in enterprise, stewards of capital, champions of innovation, and seekers of prosperity. Today, we stand at a crossroads in history where the choices we make with our time, our resources, our intellect, and our capital will define not only the markets of 2026, but the shape of economies, societies, and the very texture of human opportunity for decades to come. We gather here not merely to debate quarterly return or to forecast short-term trends, but to do something far more consequential. We gather here to set our sights on the future, to take a stand for leadership over complacency, for vision over skepticism, and for courage over hesitation. And so, under this banner of ambition and foresight, I am honored to, with full conviction, reveal what I believe to be the top two, no hesitation, stock picks for 2026, companies so uniquely positioned at the intersection of innovation, economic resilience, and strategic global impact that, in my view, they represent not just great investments, but transformative pillars in the unfolding century of human progress. Before I reveal those names and the reasons behind their selection, let us pause to reflect on the world we inhabit, the forces shaping markets today, and what it truly means to build long-term value against the tides of uncertainty. The economic landscape, clarity through complexity. We live in an era defined by paradoxes. On one hand, we witness the most rapid acceleration of technology in human history, artificial intelligence, machine learning, data everywhere, computational capacity growing exponentially, new industries being imagined while old ones are being dramatically reshaped. On the other hand, we confront economic and geopolitical stressors that test the durability of global systems, inflationary pressures, supply chain reconfiguration, shifting geopolitical alliances, climate imperatives, demographic transitions, and the distributional tensions of wealth and opportunity. Some say the future is unpredictable. Others say no one can see beyond short-term cycles. I say this: we are not blind to risk, but neither should we be paralyzed by it. The greatest opportunities emerge when we understand the forces at play and invest in what endures, not what is merely fashionable. To quote a phrase that has guided many lasting enterprises, price is what you pay, value is what you get. So let us talk about value. What defines a no hesitation stock? When we describe a stock as a no hesitation pick, we mean durable competitive advantage. The company possesses strategic assets, technology, market position, or intellectual property that cannot be easily replicated. Long-term growth potential. Its market opportunity expands as global demand accelerates, not contracts. Strong financial discipline, a solid balance sheet, disciplined capital allocation, and a culture of financial prudence. Contribution to real human progress. The company's mission aligns with productivity gains, economic development, and the enhancement of human lives. Resilience amid disruption. It is not simply riding a wave, it is building the wave. These criteria must be met not just today, but in the years that follow as markets ebb and flow and the world reshapes itself. No hesitation, stock pick V100. A visionary leader in artificial intelligence infrastructure, stock pick with a global AI technology leader. This is not about betting on hype. This is about recognizing the fundamental architecture of the next industrial revolution, artificial intelligence not as a tool, but as the infrastructure of the 21st century economy. AI Leader Corp stands at the epicenter of computational innovation. Its chips, software platforms, data ecosystems, and developer tools are not just helping industries automate, they are reshaping how knowledge is created, how decisions are made, and how entire value chains operate. Why this matters: AI is not a trend, it's a paradigm shift. The growth of AI is reminiscent of the dawn of the internet, but broader, deeper, and fundamentally more integrated into every aspect of economic activity. AI Leader Corp's technology is essential, from data centers to autonomous systems to cloud intelligence. Its products are embedded in the foundations of future innovation, network effects, and scale. Its data ecosystems become more valuable as more participants engage, creating a feedback loop that strengthens market leadership. Global adoption is accelerating. Governments, enterprises, entrepreneurs all are integrating AI into operations, decision-making, and product strategies. This tokenizes AI Leader Corp's offerings as essential infrastructure. Social impact and productivity gains. When deployed responsibly, AI has the power to enhance healthcare diagnostics, climate modeling, education access, supply chain efficiency, and human creativity itself. IV, no hesitation, stock pick B2, a pillar of energetic and industrial transformation. Stock pick B2A, a leading energy and infrastructure champion. As we embrace the future of technology, we cannot ignore the future of energy, the force that powers every computer, every factory, and every innovation. Energy Innovators, Inc. is at the forefront of the global energy transition, combining traditional energy reliability with next-generation sustainability. Why this matters: the world still demands energy growth, even as renewable technologies expand global energy demand continues to rise. Efficient, reliable, and scalable energy solutions are critical. Transitional leadership is a strategic advantage. Energy Innovators, Inc. is uniquely positioned with assets spanning traditional energy production, distribution, and modern sustainable technologies. It bridges the old and the new. Infrastructure investment, a backbone of growth. Energy systems are not plug-and-play innovations. They are massive, capital-intensive networks. This company has the balance sheet, expertise, and strategic vision to build them. Dividend strength with growth potential. Unlike many high-beta speculative plays, Energy Innovators, Inc. delivers cash-yielding stability alongside long-term expansion, global strategic relevance, energy security, technological sovereignty, climate commitments. These are front-page imperatives for nations and corporations alike. Why these two stocks and why now? At this moment in history, we have the rare convergence of technology that expands human capability and energy systems that empower civilization to operate at scale. The first is the engine of innovation. The second is the fuel of society. Together, they represent productivity, stability, growth, resiliency, strategic advantage. They are not speculative bets. They are foundational plays on the future of human progress. A call to investors: think long, think bold, think human. Investing is not about short-term speculation. It is about belief in human ingenuity, commitment to strategic foresight, responsibility to future generations, stewardship of capital as productive force. Here lies the heart of my message. Your capital is not merely a means to profit. It is a vote for the kind of world you want to help create. If you invest with purpose, with strategic thinking, and with a long-term horizon, you help build enterprises that generate real value, value that sustains jobs, elevates lives, and strengthens economies. Common objections addressed with clarity. Ask, is AI overhyped? No, AI is real, transformative, and capable of reshaping industries. The technology has outgrown the laboratory and is now embedded in real-world applications impacting productivity, healthcare, logistics, and decision-making. Is energy a risky sector? Not when the company has a diversified base, strong strategic assets, and the ability to pivot within evolving global frameworks. Isn't the market uncertain? Yes, always. Uncertainty is the crucible of returns. The companies we select must be able to endure volatility and deliver value regardless of short-term noise. Strategic principles for the next decade. As you consider these no hesitation stocks, remember these timeless principles. Invest in what you understand. Focus on value creation over price movements. Let time be your partner, not your enemy. Diversification should not be diversification of mediocrity. Patience is a competitive advantage in a world of noise. Innovation without purpose is just spectacle. Purpose without innovation is just inertia. Closing vision, the future we build together. In closing, let me offer this vivid image. Imagine 10 years from now, a world where artificial intelligence amplifies human potential rather than displacing it. Energy systems power not only cities, but prosperity, sustainability, and resilience. Capital markets reward long-term strategic thinking over short-term speculation. Investors are not just speculators, but architects of progress. Wealth is not merely measured by dollars, but by the number of lives improved and opportunities unlocked. When you invest in AI Leader Corp, you invest in the minds of tomorrow becoming real today. When you invest in Energy Innovators, Inc., you invest in the power that sustains societies and fuels innovation. These are not just two stocks. They are ideas anchored in the deep currents of economic transformation, anchored in human aspiration, creativity, and resilience. And these are the no hesitation picks for 2026, not because they are trendy, but because they are timeless. The psychology of future billionaires. Let me shift gears for a moment, because stocks alone don't create billionaires. Mindsets do. The reason some investors transform modest capital into extraordinary wealth over time isn't because they have secret information. It's because they understand something deeper. Markets reward patience, conviction, and emotional discipline far more than intelligence alone. Future billionaires think differently. They don't chase headlines. They don't panic with the crowd. They don't confuse motion with progress. Instead, they ask you, is this company building something the world will need more of in 10 years, not less? Does it have the financial strength to survive storms? Does its leadership think in decades, not quarters? That's why the two no hesitation picks we discussed are so powerful. They sit on top of long, unstoppable waves, not short-term ripples. AI is not reversing energy demand, is not shrinking. Infrastructure is not becoming irrelevant. These are structural forces, and structural forces create structural wealth. The compounding effect most people underestimate. Let's talk about something that sounds simple but changes lives: compounding. Most people understand it mathematically. Few understand it emotionally. Compounding doesn't feel dramatic at first. It feels slow, almost boring. That's why so many abandon it before it works. But when you combine a great business, long-term reinvestment, strong cash generation, expanding global demand, you don't just get growth, you get accelerating growth. AI Leader Corp compounds through data network effects, expanding software ecosystems, hardware dominance, recurring enterprise adoption. Energy Innovators Inc. compounds through long life infrastructure assets, reinvestment in new energy systems, stable cash flow funding future growth, strategic positioning in global supply chains. This is not lottery ticket investing. This is engineered wealth creation. Why 2026 is a strategic window? Why focus on 2026? Because we are at the early innings of multiple transitions happening at once. Transition, what it means, AI expansion from experimentation, enterprise-wide integration, energy shift from fragmented systems, integrated global networks, capital flow realignment investment moving toward infrastructure, tech backbone and resilience, productivity renaissance, automation, flux intelligence, lifting output per worker. Periods like this don't come often. The last comparable era, the early internet boom, when digital infrastructure quietly became the spine of the global economy, those who invested in the infrastructure layer, not just the flashy apps, built generational wealth. Today, AI compute platforms and energy infrastructure are that layer. Risk, the word we must respect. Now let me be clear, no hesitation does not mean no risk. It means high conviction relative to long-term fundamentals. Every investment carries uncertainty. Regulation changes, technological shifts, economic downturns, geopolitical disruptions, but strong companies don't avoid storms, they're built to outlast them. The companies we're discussing have scale advantages, global diversification, strategic relevance to governments and enterprises, strong balance sheets. That's the difference between fragile growth and resilient growth, XIV. The global picture, this isn't just about Wall Street. The future of markets isn't local, it's planetary. AI is not an American story. Energy demand is not a regional story. Emerging markets, industrial economies, developing nations, all are accelerating their adoption of advanced technology and reliable energy systems. These companies are positioned not in one geography, but across global demand curves. Future wealth creation happens where populations grow, urbanization expands, technology adoption accelerates, infrastructure modernizes. These trends are long-term and deeply rooted in demographics and development XV. A message to young investors: if you are early in your investing journey, hear this clearly. You do not need to swing for the fences every time. You need to own pieces of the future and let time do the heavy lifting. The mistake young investors make is thinking speed equals success. But wealth built slowly through strong businesses often surpasses wealth chased through speculation. Ownership in transformative companies, held with discipline, can change your financial trajectory in ways trading never will. XV leadership, the hidden asset, balance sheets matter, technology matters. But leadership, that's the multiplier. Both of these companies are led by executives who think in decades, invest in research and development, manage capital responsibly, understand geopolitical complexity, build ecosystems, not just products. In uncertain times, leadership quality becomes a strategic asset. CFI, the moral dimension of capital. Let's elevate this discussion beyond profit. Capital shapes the world. Where money flows, innovation grows. Where innovation grows, opportunity expands. By investing in AI infrastructure and energy systems, you are not just pursuing returns, you are supporting medical breakthroughs, climate solutions, efficient logistics, knowledge accessibility, economic mobility. Responsible capitalism is not a contradiction, it's a force multiplier for human progress. XY. What the next decade may look like, picture 23/6. AI systems collaborate with humans in nearly every profession. Energy grids are smarter, more efficient, more resilient. Industrial output is cleaner and more productive. Global connectivity fuels entrepreneurship everywhere. The companies that enabled that world will not be footnotes. They will be pillars. And those who recognize their role early will have participated in one of the most significant wealth creation cycles of the century. Final words before the next chapter. So when we say future billionaire picks, Jamie Dimon reveals his top 2 no hesitation stocks for 2026. We are not talking about hype. We are talking about infrastructure over noise, vision over fear, time over impulse, progress over speculation. The future does not reward the loudest voices. It rewards the clearest thinkers with the longest horizons. And the opportunity before us is not just to grow wealth, but to help finance the architecture of tomorrow's world. XX, how to build a portfolio around no hesitation. Leaders, owning great companies is powerful, but building wealth at scale requires structure, not just conviction. Think of these 2 companies the AI infrastructure leader, and the energy and industrial transformation giant as core pillars, not the entire building. Future billionaires don't just buy stocks, they build systems of ownership. 1. The core satellite approach. Here's how disciplined long-term investors think. Portfolio layer, purpose, example, role, core holdings, stability, fluff, structural growth, AI infrastructure leader, energy infrastructure leader, growth satellites, higher upside, more volatility, emerging tech, advanced materials, robotics, defensive layer, shock absorption, healthcare, consumer staples, cash flow assets, opportunistic capital, tactical plays, cyclical opportunities, market dislocations. Your 2, no hesitation, stocks live in the core. They are not trades, they are long-term ownership stakes in global transformation. XXI, the infrastructure wealth cycle, a historical pattern. History leaves clues. Every major wealth creation era was built on infrastructure, not surface trends. Era infrastructure result, railroads, transportation networks, industrial expansion, electricity, power, grids, urbanizations, manufacturing boom, oil, highways, energy, mobility, global trade, explosion, internet, digital connectivity, information economy. Today, AI, energy systems, intelligent, automated, electrified world. In each case, early investors in the infrastructure layer saw the most durable gains, not the gadgets, not the short-lived consumer fads, the foundations. That's where we are again. Why markets misprice long-term giants? Here's a paradox. The market is very smart in the short term about news and very slow in the long term about transformation. Why? Because quarterly earnings are easy to measure. 10-year structural dominance is not. So companies building long-run ecosystems often look expensive in year 1, fair in year 3, obvious in year 10. Future billionaires tolerate that uncomfortable early phase when conviction feels lonely. Sex-free volatility is the admission fee. Let's address something honestly. If you own transformative companies, you will experience drawdowns, headlines, fear cycles. That is not a flaw. That is the price of admission. Volatility is what transfers shares from the impatient to the disciplined. The investors who win are not those who avoid turbulence, but those who understand the difference between price fluctuation versus business deterioration, as long as the long-term thesis strengthens. Market dips become opportunity, fear becomes fuel, time becomes leverage. XXIV, the compounding of knowledge. Another secret of extraordinary investors, they compound understanding, not just capital. If you own an AI infrastructure company, learn how data centers work, where demand is growing, how enterprise adoption evolves. If you own an energy infrastructure company, learn grid modernization trends, industrial electrification, geopolitical energy dynamics. Knowledge increases conviction. Conviction reduces emotional mistakes. Fewer mistakes to more compounding. XXV. Macro forces that amplify these picks. These companies aren't fighting the macro environment. They are aligned with it. AI infrastructure tailwinds. Automation to offset labor shortages. Data growth from every industry. Enterprise productivity pressure. Government AI investment. Energy and infrastructure tailwinds, electrification of transport, grid expansion, industrial modernization, energy security priorities, urbanization in developing economies. These are decade-long currents, not quarterly waves. XV, the patience advantage. In modern markets, patience is rare. Everyone wants instant gains, viral trades, fast flips. That impatience creates opportunity for those who wait. The longer your time horizon, the fewer competitors you have. Most capital is short-term. Very little capital is truly long-term. That's an edge. What could derail the thesis? Responsible investing means asking hard questions. AI risks, regulation, ethical concerns, competitive breakthroughs. But the direction of AI adoption remains forward. Society debates how, not whether. Energy risks, policy shifts, commodity cycles, yet energy demand and infrastructure modernization remain unavoidable realities. These companies aren't dependent on one scenario. They're embedded in multiple global pathways. Wealth is built in silence. The biggest fortunes are not made in dramatic moments. They are built quietly, reinvesting dividends, holding through noise, letting earnings grow, allowing innovation cycles to unfold. By the time the world calls a company inevitable, most of the gains have already happened. The early stage feels uncertain. The late stage feels obvious. XIX. A message to those who doubt. Skepticism is healthy, cynicism is expensive. Every transformative era looked risky before it looked brilliant. Railroads were too speculative. The internet was bubble. Electric vehicles were impossible. The future always sounds unreasonable until it arrives. TechXX, the legacy question. Let me end this section with something deeper than returns. Ask yourself, when history looks back at this era, what will define it? Not memes, not day trading, not short squeezes. It will be remembered as the age intelligence became scalable, the age energy systems transformed, the age infrastructure was rebuilt for a digital civilization. Owning companies that enabled that shift means you didn't just profit from history, you help finance its XI. The final perspective, what this moment really means. We often think investing is about beating the market, but the greatest investors in history did something else. They aligned themselves with inevitable change. They didn't predict every twist. They didn't avoid every downturn. They simply made sure they stood on the side of forces that were too powerful to stop. That is what we are talking about here. Artificial intelligence is not optional for the future economy. Energy transformation is not optional for the future world. These are not trends. These are structural realities like electricity in the 1900s, the automobile in the 1920s, the internet in the 1990s. And when structural realities emerge, wealth doesn't just grow, it shifts toward those positioned early. Etc. The courage gap. Here's a truth most people don't say out loud. Opportunities are not rare. Courage is rare. The difference between those who watch history and those who shape it is the willingness to act when the future is unclear. Experts disagree. Headlines create fear. Short-term volatility shakes confidence. Conviction is uncomfortable, but comfort rarely builds extraordinary outcomes. Scarcity. Ownership vs. speculation. Speculators ask, will this stock go up next month? Owners ask, will this company matter more to the world in 10 years? That single shift in thinking changes everything. Ownership creates patience. Patience allows compounding. Compounding builds wealth that looks impossible in hindsight. The two no hesitation companies we've discussed are not lottery tickets. They are ownership stakes in systems the world will increasingly depend on. XIV, the invisible multipliers. When great companies grow, the benefits multiply beyond shareholders. They fund innovation, create advanced technology, strengthen supply chains, improve productivity, capital, when directed wisely, becomes an engine for societal advancement. This is the part of capitalism we don't talk about enough. Investment isn't just extraction. At its best, it's construction. XXV. The time horizon, that changes everything. If your time horizon is 1 year, the market looks chaotic. If your time horizon is 10 years, patterns emerge. If your time horizon is 20 years, transformations become obvious. The investors who change their financial destiny do one thing differently. They extend their time horizon beyond the emotional cycle of the crowd. Time smooths volatility. Time rewards innovation. Time amplifies compounding. Time is the ultimate partner of the disciplined investor. XXV, the world of 2036, a glimpse forward. Let's look ahead. A decade from now, AI systems help design medicines in weeks instead of years. Energy grids balance demand intelligently across continents. Factories run with precision and efficiency we once thought impossible. Education, logistics, healthcare all operate on smarter systems. Behind that world are companies that built the computing infrastructure, the data systems, the energy networks, the industrial backbone, and those companies didn't emerge overnight. They were funded, built, and owned years earlier by those who saw where the world was heading. XXV. What future billionaires actually do? They stay rational when others panic, stay patient when others chase speed, stay focused when others get distracted, stay invested when others exit too early. It's not brilliance, it's discipline applied over time. Extraordinary outcomes often come from ordinary decisions repeated consistently. XXV. The quiet power of conviction. There will be moments when markets fall, moments when narratives change, moments when doubt feels louder than logic. In those moments, conviction becomes your anchor. Not blind optimism, but informed belief rooted in business fundamentals, long-term demand, strategic relevance. Conviction turns volatility from threat into opportunity. XX, the final thought. When people look back at this era, they won't remember the daily swings, the trending debates, the temporary fears. They'll remember that this was the time. Intelligence became scalable, energy systems evolved. Infrastructure was rebuilt for a digital civilization, and some investors didn't just watch it happen, they owned it. XL closing words. So when we ask future billionaire picks, Jamie Dimon reveals his top 2 no hesitation stocks for 2026. The deeper message is not about 2 ticker symbols, it's about a philosophy. Invest in what builds the future. Have the patience to let it unfold. Have the courage to hold through noise. Understand that wealth follows value and value follows progress. The future does not belong to those who wait for certainty. It belongs to those who recognize direction, and direction right now points clearly toward intelligent systems, powerful infrastructure, global transformation. The opportunity is here. The question is not whether the future arrives. The question is, will you be positioned when it does?